Well, good afternoon, smart traders. Francois here, senior analyst and trading specialist here at Smart Online Trader. Please let me know if you can hear me loud and clearly. I do see that I have a message here so far from Duncan. Hi, Duncan. I just want to hear, can the rest of you hear me? Yes or no? Please let me know in the chat section. I would love to hear from you guys. Okay, I'm not seeing any messages coming through. Can you guys hear me? Yes. Okay, there we go. Thank you, Gert. I see I have a yes. Yes, clearly from Duncan. Yes, yes. Okay, fantastic. There, all the messages are coming through. That is absolutely fantastic. Okay, awesome. Guys, before we get started, I would also just like to ask every single one of you before we get going to please smash that like button, as it will truly help us with our YouTube algorithm. Okay, so let's get going. So as always, I just want to welcome everyone to this weekly Jumpstart session, and please ensure that you stay till the very end, as at the end of this specific session, I will be sharing my analysis on potential trade setups that we can be on the lookout for in the week ahead. Today we are specifically going to be looking at Euro USD, gold, and Nasdaq. So in the chat section as well, just light it up for me a little bit. Let me know which one of these three pairs is your favorite to trade. So I would really like to hear from each and every one of you, just to let me know between the three pairs that I just mentioned. So this is Euro USD, gold, and Nasdaq. Which is your favorite to trade? Okay, so as we are waiting for that to happen, let's continue, as I know it is Sunday, so I don't want to take up a lot of your time. So we are going to start off by just having a look at what happened last week. Then we're going to look at the primary things to look out for in the week ahead. And then we are going to get into that analysis session. So in the week that has passed, despite the fact that it was mostly a calm week regarding our economic calendar, the number that came out on the initial jobless claims report truly created some volatility in the market. So here we saw that it rose by 13,000 to 196,000, which was a lot higher than expected, as the expected figure was only 190,000 from the previous week. The Federal Open Market Committee, also known as the FMOC, recently increased its target rate for the federal fund by 25 basis points. We all remember that, and this obviously is making for a gradual slowdown from that fast pace that we had last year. So last year it was consistently 75 basis points, 75 basis points, 75 basis points. Now we're down to 25 basis points. And I must say, I'm a little bit nervous for the one coming up. And this is why I am going to talk about it later, but there's some massive events taking place this week that is definitely going to, point us in the direction of what the Fed is going to do in the future. Okay, so markets are still processing as well during this week from the previous week's favorable NFP report. Okay, furthermore, during this week, we had Federal Reserve Governor Christopher Walter, which on Wednesday specifically noted that inflation is not under control yet, which, based on his comments specifically, we could see additional interest rate rises coming up. And this is why I'm saying that I'm a little bit hesitant. I'm kind of scared of what is kind of in store for the dollar. I don't believe personally that we have seen the peak of the US inflation, and in the same way, I don't think we've seen the peak of the dollar yet, but that's just my personal opinion, okay? And we are going to chat about this a little bit later on. Moving on from currencies, looking at commodities. So gold found support at that 1850 level. So that's 1850. And this was primarily because of the fact that, well, after NFP, the US dollar strengthened, there was a lot of pressure on the gold prices, and we did see some slight weakness in the dollar on Friday, but not much. But that easing pressure, literally right at the end of the week, kind of just was able for the dollar just to show that little bit of a pullback, especially as well as the fact that on Friday, the Michigan Consumer Sentiment Report came out, and this also assisted. Okay, so despite dipping to that support level between 1850 and 1855, there has been no signs of a rebound yet. Okay, so we are going to look at the analysis on gold a little bit later on, but as I'm saying, there's no clear sign of a rebound yet. So please don't just go jump into buys because why? You read that statement of buy low, sell high, and now you're like, okay, we had a low point, so what am I going to do? I'm going to jump in the market. I just want to be a part of it. Don't FOMO on that. Okay, we are going to look at concrete analysis a little bit later on, and we are going to show you how you can benefit from off the market once we get those clear signs on what we are able to trade. Okay, so the bulls are still holding back on this one specifically, and we will just have to see how we can go further on this going forward. Okay, then looking as well, so just some notes on Euro USD, as this is also one of the pairs that we are going to be looking at. So during the week that passed, we saw declines to below 1.07. So as I said, this was a quiet week, but we saw absolutely that the bears were 100% in control of this. Euro weakened, dollar strengthened. Euro USD still remains down 0.7% for the week. And this is after the release of NFP. So there we saw, that massive first spike, and then everything just continued from there on forward. So during the week that also is coming, etc., we will be having a look at how different monetary policies are influencing not just the dollar, because during this specific week, there is also monetary policies that are coming out for the euro and for the UK. And this can also affect specifically Euro USD and GBP USD. So definitely something also to just make a note of. I really do hope that you guys have at least a pen and paper with you, because these are going to be super, super important things to just note down. Finally, just ending things off at Wall Street. So this week we had a lot of positive earnings reports in this week that has passed. So earnings news was mostly positive. Walt Disney and PepsiCo, we saw surpassing expectations with regards to their earnings. And as well, if we look at the data that Bloomberg provided, so on the S&P 500, of the total companies, and I think the last time I had a look, it's not 500 companies. I know we all think it's 500. It's not 500. It's like 487 or something like that. If you have the figure, please let me know in the chat section. I would love to know the exact figure again. I haven't really researched that in a while, but according to Bloomberg's data, 329 of the companies on the S&P 500 have already reported their earnings for this earnings season. And approximately 55% of them have exceeded revenue projections. Okay? And over 70% have exceeded earning projections. So this still shows that, even though inflation is on the rise and interest rates are on the rise, etc., the economy is still doing really well. Companies are doing well. Earnings are, so revenue is above projections, earnings are above projections, and this automatically gives the Fed a little bit more leeway with regards to their monetary policy. Okay, so, and I mean, even as businesses, we are still trying to evaluate that long-term impact of this super aggressive monetary policy and tightening that the Fed has had in the last while. So definitely still creating absolutely fantastic trading conditions for us as traders. I just want to hear, are you guys all still with me? I see I have quite a few people still here. I have a bunch of comments that came through. So Gert says he's absolutely on gold. Love that. Okay, Duncan, Euro USD, Shawl, Euro USD, Marinda, Euro USD. Oh, a lot of Euro USD fans here. I have a massive amount of Euro USD fans. Then I have William Schultz with NASDAQ. Billy says all three. Okay, but Euro USD if I had to choose. Okay, so he likes trading all three, but Euro USD if he had to choose. Then I have Liesel with gold and Euro USD, Annette Euro USD, Duncan. It doesn't look good for the USD. Duncan, at this point, I'm almost going to disagree with you. Okay, so, but we'll have a look at it just now. Okay, we are allowed to disagree. This is why we are traders. We are going to make different decisions regarding our trading, and this will obviously create for different trading with regards to our own setups. Okay, how do we trade Walt Disney? You should be able to trade it through your broker. So I know as far as with our broking partner, it is listed there. Last time I checked, I'll just have to double check for you. But if you've got my details, please send me a message or send me an email. I'll pop my email into the chat section now. So my email is guru@smarttradecollege.com. Just pop me a message and we can take everything from there onwards. Okay, so getting back to today's session, getting back into it. So as I said, we are going to also have a look at the primary things that are taking place this week. So this is where you absolutely need to get out your note pen or your notepad and your pen, because now it's time to start taking notes. So probably the biggest event of the week, and this is not to be missed, is Tuesday's US CPI report. Okay, so if you don't know what that is, the CPI report is the consumer price index report, and this in layman's terms just basically means it's the US inflation report. Now, for all our Smart Online Trader members, please go have a look on your LMS, because tomorrow evening at 7:30 I'm going to be having a session just on this report specifically. We're going to look at different potential outcomes, how to react to those outcomes, and how to set up your trades so that you can profit the absolute most from this report. Okay, so for all our Smart Online Trader members, this is not something that you want to miss. If you are watching this video and you are not a member yet, please have a look in the description below. There is a link. There's also a link to a 7-day free trial. So you can even sign up for a 7-day free trial and we can take things from there. But that out the way, as I said, Tuesday inflation report. Now I know myself, colleagues, and everyone on our channel is definitely going to be awaiting this specific report that is coming out on Tuesday. And main reason is that the signs of to see how the inflation in the US is currently doing will directly impact how what we can expect from the Fed and the rate hike increases that they are going to do this year. So that will automatically have a direct impact on that. So definitely something that we are going to be on the lookout for, and definitely something that we are going to be trading. So this is coming out on Valentine's Day. So the market's Valentine's gift to you is profits. It's the easiest way I can put that. So if you know what to do, and if you have the correct signals, this is definitely a report to trade. Other than that, if you're not 100% sure what to do, log into my session tomorrow evening and we'll take it from there. Earnings season is also kind of coming to an end this week. So in the past week, we obviously saw Nasdaq posted its first weekly decline for the year, so that's their first weekly decline for 2023. They are down 2.4%. It was absolutely crazy. S&P 500 ended 1.1% lower. The Dow Jones was down 0.2% roughly. And so it's been a majority, hawkish week for the stock market. But with earnings season coming to an end, we could potentially see easier market conditions coming into this actual week and into our trading. And this will definitely be able to make our trading slightly easier, especially from of a technical point of view. So with regards to earnings, don't worry too much. There is one or two companies that are still going to report their earnings during this specific week, but nothing truly noticeable and nothing that will, really affect the market too much going forward. Okay. As I was saying, we don't just have US key data coming out this week. So on Wednesday, the UK is also releasing their inflation data. As well as on Tuesday, they are releasing their jobs data. So these are two reports that we definitely need to be on the lookout for, because these two reports will also determine what the Bank of England is going to do in the month of March. Now, the last time they said that they are not 100% certain with regards to their next interest rate hike. We saw their previous one was 0.5%, but if things don't get under control, that can literally just continue through again in March. On that note, just as we are in that specific area, the Eurozone Commission is also set to release their quarterly forecast for the Euro area on Wednesday. And this is just ahead of the Eurozone GDP data, which is coming out on Tuesday. So on Tuesday, they are going to do that GDP data report, so that's going to be released then. And on Wednesday, it's the economic forecast for the Euro, or for the entire Eurozone. So these are definitely two reports to be on the lookout for, and definitely as well will create great trading opportunities for us on Euro USD. Then on final news for this week for all our JPY traders. Do I have any JPY traders here? So that is if you are trading Euro JPY, USD JPY, GBP JPY, any JPY pair. Do I have traders here trading that specifically? Let me know in the chat section real quick. I'll give you guys a second to respond. While you respond, I'm going to take a sip of my coffee. As well, let me know if you guys want, smart online trader branded cups. We haven't really really started selling branded merchandise, but I have like smart online trader branded everything. So if you guys are interested, let me know. Pop me an email. So I have a few hands coming up. So we have Liesel Frey, I have Duncan, Shaw. I love the little pink hands, so cute. And Mr. Vogel, Andrew Vogel there with, yes, JPY. Okay, great. So for all you guys, I would kind of stay out the market on Tuesday. Just my personal opinion. If you are trading anything JPY, I won't be trading JPY pairs on Tuesday. Main reason for this is that on Tuesday, the Japanese government, so the government of Japan, is set to release their candidates or nominated candidate to replace the current Bank of Japan governor. Now, I actually have his name written down here. I am not going to try and pronounce it because I will be swearing someone. Like I'm not going to actually try and pronounce that name. But for the Bank of Japan, you can only serve a term of 10 years. So that's 1 decade that you can serve as governor of Japan, of the Bank of Japan. And this specific governor, his time has come to an end. So they will be announcing who they have decided to replace him. And this is going to affect the JPY immensely. Why? Because this is going to be the new guy that is going to decide the monetary policies for Japan. Okay? And if you have been following the monetary policies for Japan, they've been extremely dovish. They have been looking after their people, even though inflation has kind of been rising. You know, they haven't really gone full out and said, you know what, we are going to just rise our interest rates as well, and we are going to do what the other countries are doing and just following suit. Bank of Japan is doing their own thing. So this new governor could shift things up a little bit. He could bring in some new things that could definitely create some ructions within the market. I have no other way to put it. And that is going to create some interesting trading. But on Wednesday specifically, Tuesday specifically, I would rather not. Well, for South African traders, maybe you're going to miss it because it'll happen in the earlier parts of the day. So during the later part, when the spikes and everything have happened and, you know, they've announced their new candidate, by all means then look to trade the market. But just be on the lookout if you're entering any trades tomorrow that you don't fall into that trap that you are in a trade and then all of a sudden they release the news and then stop loss. Or for those renegade traders that don't use stop losses, blown accounts. Okay, I'm an absolute forerunner for stop losses. I don't trade without them. So if you are one of the people that are not trading with the stop loss, please start using one. Okay, I really beg you. Okay, so that's everything for this session regarding news. Let's get into the analysis. Let's start with all of that. So I'm just going to take this off and there we go. So before we get going with this actual session and with this specific analysis session, please just familiarize yourself with the risk disclosure currently on your screen. Okay, so everything that I am going to be sharing during this specific session is purely my opinion and should not be taken as financial advice. Okay, now that we've gotten that out the way, let's get into the analysis. Let's get started. Now I can pop myself back onto the screen. So as you can see here, we do have Euro USD on a daily chart. So charts aren't moving. Why? Well, it's Sunday. Forex charts don't move on a Sunday. And if we drop this down to a slightly lower time frame, here we can see that we have broken cleanly out of that channel. So if you have a look over here, there was a clean break of the channel, and this primarily means, you know, further downward momentum on this. For me, I'm just going to, even on a lower time frame, so even if you're looking at an hourly, you don't have to fully wait for a 4 hour. So if you can look here on the hourly, we can see here that there is this lower resistance level. So basically exactly where we are now. So I'd actually like to see how the market opens, because on this resistance level that we have here, if we can get a nice clean retest right there, starts of Monday, and we can get a clear rejection, we can definitely see further downside potential on this specific instrument. Also, please keep in mind that on Tuesday we are going to have the US inflation report that is coming out, and that is going to create havoc on this specific pair. So whatever you enter in tomorrow, if you do enter into any sell positions, please ensure to secure profits before that US inflation report, okay? Because you don't want to get caught in a trade with an open stop loss before that specific report comes out, okay? So if you do enter into trades, I do believe that in the build-up to the inflation report, we could potentially see this push all the way down to here. But if tomorrow morning there is no clear rejection on this lower resistance over here, we could actually see a small correction back up to that trend line and that primary resistance before we can see that further downside. Or if the inflation causes it to break through, then going into Wednesday, Thursday, Friday, then that would be our general bias with regards to this specific instrument. Let me know your thoughts on what I just shared. Do you agree? Do you disagree? Do you have any questions? I would love to hear from you guys. Additionally, I'm going to ask again, because of the fact that I see we only have 8 at the moment, and we have like over 30 of you guys here. So please smash that like button. It would truly mean the world to me. It also means to me that you like my content. Okay, that's what that little like button is for. Is that you are liking the content that we are sharing. Okay, don't hit the dislike button. That's not an option. It's just the like button, nothing else. But please smash that like button. I'd really appreciate it. So Gert says he's got no idea. He's just going with the analysis that we are sharing. I would love to hear from the rest of you as well. Do you agree? Do you disagree? What's your viewpoint on this? Definitely let me know in the chat section, please. Then we are going to move on and move over to our primary commodity, which is gold. So exactly as I stated during our little news catch-up session, here you can see gold came down. Well, we had that massive drop that took place last week, Friday. And then these 5 little sad candles was our trading for the entire week. Okay, nothing really much happened. And from here on forward, okay, wait, let me actually just ask the question this way. Seeing that the comments in the chat section are relatively few, can you see my chart? Yes or no? Is my screen sharing? Can you see my chart? Yes or no? Please let me know. I would really appreciate that. So just let me know real quick. Can you see my chart? Yes or no? I'm going to give a second because that is super important for me to know if you guys can see my chart or not. Okay, so thank you so much, Marinda. I really appreciate that. So, as I was saying, 5 little sad candles, for the week that we had. But, ending on a slight bullish note for Friday. But this doesn't necessarily mean that, well, we at the bottom, we at the primary support level. So what are we going to do now? We just automatically buy up to that next primary resistance level at 1900. No, okay, we need to get clear indication that that is what the market is planning, and for that I'm going to drop down to at least a 30-minute time frame, and here you can see that yes, tides are turning. Okay, EMAs are pointing in the right direction. We also have a lower time frame pennant forming over here. So obviously pennant being able to break in any direction. So there is still a chance that we're just going to bounce on that trend line and then sell from there. So you do want that clear indication before entering into your trade. So what would that clear indication be? Well, firstly, I'm going to wait for all three, my EMAs, to cross. Now, for those of you who don't know which EMAs I use, my primary EMAs are 50, 21, and 8. Okay? So those are all three my EMAs that I use the most. So it's 50, 21, and 8. And once we actually get that clear cross, just wait for that small retest. Okay? That retest is imperative on any pair. No retest, no trade. So once you actually get that retest, then we can look for that buy, and then we can get into the market going in that direction. If this, however, doesn't happen and this pennant breaks to the bottom, I would wait for a clear break of our support level, which is this 1850 that we spoke about. And once that 1850 level has been broken, then obviously we're going to look for sells. And especially if inflation is still rising, then that will automatically mean that we could be looking at the Federal Reserve increasing interest rates even more, and that could lead to a stronger dollar. So that in return could also back for gold to be falling. Why? Because if the dollar strengthens, gold weakens. Okay, so but in general, that is my analysis on this. I'm waiting for clean break, a retest on our dynamic support, which is our EMAs, and then we can trade from there onwards. Sorry, wrong chart. Moving over to the last one for today, which is NASDAQ. So let's just look at how this looks on a daily time frame as well. So as you can see, as I discussed, not the best week we had for NAS. Fell on Monday, had a little recovery on Tuesday. Wednesday, Thursday, Friday wasn't great, okay? And finished the week off just above that primary support level. Okay, I'm just seeing there's some comments coming through. I'm guessing, because I see Duncan retracted his message. So seeing that Billy actually wrote out exponential moving averages, I'm guessing he asked what EMAs are. And yes, so you do have multiple different moving averages, such as simple and etc. etc. My favorite one to use is the exponential. Why? Because it uses more current data than some of our other moving averages. Okay, so you can use absolutely any moving average you like, or that suits your style of trading. But myself personally, the exponential moving average just kind of falls into my style of trading and what I like to do. So getting back to NASDAQ, now I primarily look for my entries on the 30-minute time frame. So what I generally look for and what I would like to see is, as you can see at the moment, we are in a massive downward trend still. It's been happening for most of the week. And you can see here, there was our death cross. So there all our EMAs crossed into bearish momentum. This I don't trade. Okay, why? Because there's no clear entry signal. Just for me, okay? That's where I entered into my NASDAQ trade last week. Well, on Thursday, to be more specific. And the reason why is here you had your downward movement. As I said, no retest, no trade. There's my retest. And there's my entry. I hope that makes sense to everyone. And then, as you can see, nice 1% move that took place there. 0.5% stop loss on this. So, and then went from there. However, as you can see, that happened again on that candle as well as that candle. You could also, interpret them as retests, but they are not valid entries because we are super close to that primary support level. So I see that Duncan says he likes the support. It is a really good support level to trade from. But now hence why those last two weren't really entries for me. So what am I looking for at the moment? I'm looking for one of two things to happen. Going back to the 30-minute time frame, I'm either looking for a golden cross, so that means I'm looking for all my EMAs to cross so that this thing can go bullish, or I am looking for Nasdaq to actually break this support level and then just retest, and then we're going to continue to sell. Okay, so those are the two things that I am waiting for on this specific instrument and looking at our trades going into the week. With all three of these, please keep in mind that, as I was saying, we do have the inflation report on Tuesday, so don't, just keep trades open. Don't just randomly jump into anything that you see. This could really affect your trades for the rest of the week, and you don't want to start the week with losses. Okay, so I want to just say thank you to every single one of you who took the time out to join me on a Sunday evening to look at charts and chat about news. I really do appreciate it, and I value your time. If you haven't done so yet, please subscribe to our channel, smash that like button. Other than that, have a fantastic evening further with your friends and family. Have a profitable day in the market tomorrow. And as always, may the force be with you. Cheers.